All right, guys. So today we are going to be talking to Vice President of American Southwest Lending, Billy Holden. We actually had an opportunity to talk with him a little bit last year, and I wanted to bring him back to the show because we want to talk about mortgages. It's the beginning of 2021. We want to talk about what interest rates are around, what they're going to be at, what we think for the rest of this year, what that means for you if you're a buyer or if you're in new home sales and you're talking to buyers, how you're walking them through the process and educating them on what they can buy, their bang for their buck, all the things. So welcome, Billy, to the show. Thanks for being here today.
Yeah, good to be here. Hope you guys are safe out there and everything is looking good for 2021.
Awesome. So let's kick it off. It's beginning of 2021. We've had some changes in guard with president, parties, all that good stuff. So just kind of in general, broad brushstrokes, then we'll kind of drill down into the DFW market. What are you seeing with interest rates? What do you think people can expect as we move forward? What are you telling your clients and your team?
Well, our forecast that we got, at the last quarter of 2020 is that the rates are going to be very stable through the end of 2021 and even 2022. The Fed rate, which kind of corresponds a little bit with mortgage lending, is pretty much frozen at zero till mid 2022.
Okay.
So based on that, it's probably going to be the best time in history to buy a house because the rates are going to continue to be at all-time lows. And your buying power with these low rates is a lot more, and you can probably afford quite a bit more than what you could even in 2019. So it's a good time. I know we've had a rough 30 days here with all the political stuff going on, but like I said, our business is moving forward. Home prices are inching up a little bit, but the rates are lower, so you still can afford what you need to afford.
And when we're talking about interest rates, kind of give the audience an idea, because I get asked that all the time, and sometimes I'm afraid to even quote it because I've heard some super low rates, and I'm almost like, oh, geez, I don't know if that's legit. If we're talking about good credit, like maybe, 700 plus, what would you say is kind of a rate right about now? And of course, that's could be a moving target, depending on when people are listening to the show. And then if you've got decent credit, maybe you got some things on it, but it's lower than 700.
Right. On the government products, they don't really affect with the credit score. As long as you're above a 620, you're going to, like if you're today in the next 90 days, your rate's probably 2.375. It's incredibly low.
Holy cow.
Yeah. And on a conventional loan, not only is it low, but they raised the minimum loan amount to $510,000 here in the Dallas-Fort Worth area. I mean, if you're above 700, you're probably going to be somewhere about 2.5. If you're between 660 to 700, it's only going to be about a quarter of a point higher. So You're probably somewhere about 2.75 to 2.875. So it's incredibly low. The limits have gone up, so you can probably afford a little bit more than what you could because it adjusts for inflation.
So back in the day when rates were a little bit higher, I used to tell clients if they were looking at homes and they were looking at, like, let's say a home was a $50,000 price difference. I kind of broke it down and said, hey, for every $1,000 you add or subtract, it's about $4 a month difference in payment. So if you're looking at that house, it's like 50 grand more. It's about $200 a month different. And they'd be like, oh, wow. Like, for me to get exactly what I want, that may not be out of the question. Is there any formula you have for the rates being I haven't done the calculation with them being this low. Any idea? I know I'm probably catching you totally off guard.
It's pretty close to that. When you get below 2.5, I mean, you're talking about a nickel, a nickel or what have you for every eighth of a point. So $4 per thousand is a pretty good barometer of what you need to utilize for thinking that you can afford more of a house or you're going to be more comfortable in it. Because it's really, like I said, for $100,000 more, compared to 2016, it's basically the same payment now because the rates were 2.5 points higher.
Right. And now instead of paying a lot of more interest, you're actually getting a more expensive home.
Right.
As far as your money's going towards the principal versus all that interest back to the bank.
That's correct.
Okay. What if we've got people that are listening that are trying to figure out whether they should buy or refinance? Is there any kind of way they can try to figure out what would be the better route? Or
I mean, a lot of it has to do with how long you plan on staying in your existing home you're in right now. or if you want to get something new. I mean, if you really want to look at if your house is 15 years old, the building processes now, the insulation, the efficiency, you're probably going to save $200 to $300 a month on a regular house just off the efficiency factors. So
Right.
that you can afford anywhere from 70 to 100 grand more. So that's what you got to play. You got to put the whole picture together to see what you're trying to accomplish. I mean, honestly, if I was out there looking at the market, I'd want a new house because I know that, in my world, new is better. So,
No, totally. Well, yeah, and even with property insurance bills, right? Like you'll start to get that credit and that discount when you buy a new home versus when you in an older home. Those bills do go up a bit. So, from a mortgage standpoint, you're feeling good about where interest rates are. What are your thoughts on builder pricing? Because I have noticed material costs have gone up. We have started to see, at least in the Dallas-Fort Worth area, builder pricings going up here and there. Do you think that's going to be a trend that continues into 2021?
unfortunately, yes, because it all depends. It all dictates by the land.
Okay.
And a lot of the large landowners are demanding more money for their dirt. Therefore, that cost is being passed along. Therefore, those increases are going to continually go up. So by the end of 2021, I expect a 5 to 7% increase from today till the end of the year.
So the people that are sitting there thinking, I'm going to wait until prices go down, if that's their mindset, which I can understand, they are going to be disappointed if they do want to buy by the end of the year because prices likely are not going to go down.
I don't foresee it going down. It's just like every day when you wake up and you go buy gas at the gas station. You end up paying what's there, and it's all about supply and demand. And unfortunately, there's a lot more demand than supply right now. And what that does is drive the market prices up.
Well, let's talk about that too, because especially in the Dallas-Fort Worth market, last year we had, I think, correct me, I could be wrong, about 100,000 new reloads here in the DFW area, roughly. Does that sound about right? And I feel like we're getting more. And it probably is partially the political issues we're having, the social unrest, the fact that we have different tax rules and laws here that are favorable. But what I'm seeing is when I go out to my sales offices and visit with my sales counselors, a lot of them are now on governors as far as they can only sell 1 or 2 a month, if that. A lot of the offices are closed right now, and it's not because of COVID. And their prices are continuing to go up. So as a result, they've got this waiting list of 50, 60 people. Do you see that loosening up? Because I know even when I run numbers on days on market and inventory levels, we're under about 2 months in DFW, which is super low.
Right. I don't see it slowing down. I see the biggest thing with the new home construction world is we have supply chain issues. So there's product availability, windows, doors, things like that are in high demand and they're way behind. And therefore, what that's going to happen is as the year goes by, the prices are going to go up, which is ultimately going to affect the consumer. So that's why I think now is a much better idea than waiting down the road. You've got to get into it as quick as possible to secure the right price for you and your family.
Right. That's what we're seeing as well.
But also the relocations, I can tell you that I've been doing this a long time, and the relocations are probably 50% of the business now.
Right.
So it used to be 5%. Now half the people are coming in from New York, obviously California, Oregon, Washington, all those areas. I mean, people want to come here because of whether it's the political environment or the economical environment, you can get a lot more bang for your buck here.
Right. So let's talk about down payment. Just in case anyone listening is either renting or maybe they bought a house and it's been a while and they're trying to figure out what are the requirements. Okay, interest rates are really low, but maybe they're thinking they have to put down 20% or more. What is that looking like on the different loan types, and what is kind of maybe we'll give an example of what that translates into on something at, let's just say 375.
I mean, the FHA rates, the government loan programs, that's 410. So you could do as little as 3.5% down. So you're talking $12,000 to $14,000 on a maximum FHA loan. On conventional, 5% is about the lowest that's out there right now. So, I mean, they're going to do some tweaks with, it's called Fannie Mae and Freddie Mac programs. They're going to try to come down to like 3% on not just first-time home buyers, but second-time buyers, third time. But that's in the works for the first quarter of 2021. So we'll know more about that here shortly. But 3 to 5% is probably where it's going to be. You don't need 20% down. I know a lot of people still think that you just flat out don't. I mean, there's a lot of options out there.
Right. I think the biggest thing is people think they have to put 20% down. And when I explain to them, the biggest thing with putting 20% down is you alleviate what's called your mortgage insurance, right? Which is a premium that you pay when you don't have 20% equity in the home. So for all you listening out there, whether you're a sales counselor or you're a customer thinking about buying, when you do purchase a home, depending on if you're paying, unless you're trying to get to a certain payment range, right? 20% is not a requirement. They're going to look at your credit. They're going to look at your debt to income ratios, and then they're going to determine which scenario is best and give you some options. But if you're trying to take advantage of today's rates, then that's definitely something to take into consideration. How long can you lock your interest rate? Because I get a lot of questions. A lot of my sellers that are building new homes are like, oh, I'm going to lock in my interest rate, but I'm not closing till October of this year. And I'm like, well.
I mean, it costs money, anything over like 60 days. I mean, most people are going to tell you 30 days. I can lock in 60 days because we have extra protection with our people that we deal with directly. So 60 days out is where you probably need to stick. And like I said, with the stable market this year, the Fed rate being at 0, I just don't foresee a large jump. They're not going to slow down this housing market because that's what drives everything. So 60 days out is kind of where you really need to put your finger on whenever you're locking for a house.
Okay. So even if construction timelines are taking a little bit longer than normal, because usually if we have a 6-month construction window, we're probably looking at 8 to 10 months because like you said, we've got supply chain issues, we've got land development slowdowns, that kind of thing. Rest assured, I mean, rates are going to fluctuate daily, just like the stock market, but the reality is they're not going to change a whole bunch. And then you can usually lock in about 30 to 60 days out.
Right. And I mean, just for people out there, let's say you went from 2.5% to 3% on a $300,000 loan. I mean, it sounds scary because you're like, oh my God, my rate's gone up 0.5 point. Well, I mean, 0.5 point on 300,000 is probably about 75 to $80 either way, if the rates go up. So it's not a catastrophic. I mean, money's money, but it's not like a lot of people think it's $300.
Exactly. Really I think it's just all about the perspective. Because again, that's why I had some clients, they'll look at a home and go, we really like this one over here at 400, but I think we can only do 350. And it's like, well, what is your goals? And what $50,000 over 30 years is only X a month. And then that just kind of helps give them perspective. I know we can't really project the impact of the forbearance protection and programs or what foreclosures may look like in 2021 here in DFW. But if we do have listeners or customers as they're coming into the sales office that are currently in forbearance, before they close or purchase a new home, they actually do need to be current on their current mortgage, correct?
Yeah, absolutely.
Okay.
I mean, most of them, the new guides, you got to have 3 payments or you got to make up the full difference. I mean, because if not, I mean, you got to make sure before you sell your house, you're in line with what you're trying to accomplish. And that's why we need to take a look at it and see it and clarify it so you don't get stuck without somewhere to live, because there's a lot of different moving parts to that.
So guys, if you're listening and you've got clients that are coming into your sales office or you're a customer that's looking to buy a new home, if you have been impacted by COVID and you have, had the forbearance on your home, meaning you're not making the payments, you're going to have to be current with at least 3 payments before you're able to close on the new home. We just want to make sure everyone's aware, because I know that's been happening where people are wanting to buy, but then they've got to kind of true up on their current home. So we just want to since this is just such an interesting time.
Right.
Anything else that you're seeing in the market that you want to talk about, that you want to share? I mean, with COVID, any thoughts on if we're going to extend anything into 2021, that any other programs or any other policies?
I don't think that there's going to be any more relief in with the political environment right now. I think they're going to try to get back to as normalcy as possible. Obviously we're into this vaccine now. Things are starting to move forward. It's been a hard time, but I do think that it's going to go back to pre-COVID days. And I think we're going to have some of the relief bills are not going to pass. I don't think that's what I've been told. So I think we need to try to get ready for normalcy again as soon as possible.
And are there any first-time homebuyer programs that we have, or you want to talk about? If there's anybody listening that's maybe renting, that's curious about any other things that they would be eligible for?
They're, like I said, that's kind of a moving target also. I mean, a lot of them are income restricted. I mean, it's more for the first-time home buyer. A lot of them define that as a 175 to 275 purchase price. Well, there's not a lot out there depending on what's going on. So, I mean, it's all credit score driven and income driven, and they change these things every quarter. So it might be different quite a bit, starting in March after this first quarter's out. So I'll be able to talk a little bit more about that as they roll out.
Okay, cool. No, that's great. Texas market projections. I mean, we touched on that as far as I think we're just going to continue to see more buyers come in here. And I think there's going to be a plethora of, like you said, reloads. 50% is the makeup. So that's going to be a huge population explosion for us here in DFW. And I think a lot of that's driven by the ability for people to work wherever they want to work, right? Moving forward, a lot of companies are keeping some of those same rules or allowing their employees to work. And if they're doing that, they want to move somewhere where it's a little bit more affordable. What are you seeing as the average purchase price? Any thoughts on that? I know it's going to probably be higher than the average just for DFW since you work mainly in new construction, as I do as well. But what are you seeing as kind of the average purchase price across the Metroplex?
Probably 350.
350, yeah. Okay.
I mean, I think that's where we're at. I mean, 5 years ago, we were 250.
Yeah.
And I mean, we've just slowly appreciated. We used to be about 3 to 5%, but based on the market conditions per year, but we've just, that price has gone up, mainly driven by the land and the raw land prices have gone up quite a bit. Not that the builders are making a lot more money. It's just that they've got to pay a lot more for their dirt. There's no way around it.
Yep. Nope. Totally understand. All right. Well, I think that does it. Anything else you want to add while I got you today?
One thing I was going to tell you with buyers out there that are in apartments that have never owned a house, a lot of people don't understand that if you buy a house, you're able to write off your interest on your home plus your real estate taxes, especially people that are reloading. They don't understand it because they don't have high real estate taxes out there. They have more state income tax. So what I try to tell people is that, if you're buying a house and you have a payment that's, let's say $2,000. So you're buying a house that's $320,000. You're going to see it, as I call it, a net tangible benefit on your tax return when you file it, when you take these deductions, probably on that price range, probably about $5,000. And on $5,000, if you divide that by 12, that's $450 extra dollars a month if you divide it out, but you're going to get it in one lump sum at the end of the year when you file your taxes. A lot of people don't understand that. They don't see that because they're paying $2,000, but they're really paying $1,550. On a house that's $320,000 because that's the benefit that the government allows you to write off. So if you as a person that sells property, and if you can explain that to people, they don't think about it. They just get a big surprise on their tax return, but that surprise comes from home ownership.
Right, exactly. And so my understanding is, because I know the rules have changed here lately in the past year or so, but you can write off, up to $10,000 in property taxes on your return, and then the mortgage interest. And then what that allows you to do is then in 5 years, if you want to sell and you have equity, right, because the prices are starting to go up, you can actually sell, hopefully have a profit, versus if you continue to rent for those 5 years, you wouldn't have had the write-off because a lot of rent is becoming as much as mortgages right now, right? And Absolutely. When you finish renting, there's nothing for you to sell to gain equity. You just paid somebody for shelter for the last 5 years. So yeah, that's huge if you're a sales counselor and you can articulate to your renters why they should be looking to purchase now. They don't need 20% down. They can put as little as 3.5% down. And in a lot of cases, that's less than $12,000 depending on the price of the home they're purchasing.
Well, I mean, as well as I know, on a $1,550 net payment on a $320,000 house, where are you going to get in an apartment?
Right, exactly.
Or a 3,000 square foot house. So it's a big deal. People just need to understand that that's a benefit, and that's the most important benefit that people don't take into consideration when they're looking at their budgets.
Right. Right. No, and then like you said, with Texas having the or not having a state income tax, that's huge because a lot of people, especially that are moving here, are continuing to put that in their budget and not realizing that, we do have property taxes, but you can write off a portion of those.
It's a big deal. I just want to throw that out there before we wrap up.
Love it. Love it. All right. So definitely come back when we have any more news. I think it'll be interesting to see. I'm a little concerned about what's going to happen with foreclosures hitting the market. I'm hoping that we'll have such low inventory that we'll just absorb them versus just flooding the market and causing the rest of the pricing to go down. At least that's what I'm telling my sellers. We won't know until it happens. I don't think we even know. I think in DFW, we see about 2,500 foreclosures a month, just in general, nothing, no pandemic. And we haven't been counting those here lately. Plus we are going to have more with the virus potentially, but hopefully everything will all work out. But as we get into this year, I think we'll have more clarity, but I really appreciate you coming on the show today, because I know they're trying to figure out, should they buy? They're watching prices eke up. There's kind of a frenzy because there's not a lot of inventory, but the reality is there's never been a better time to get in. So, go see your builders that you're looking at in the area, see what lots they have available. You may have to get on a waiting list. I recommend, if you get on a waiting list, get pre-qualified, because that's going to show that you are a more serious buyer, and just continue with that process. Check in with the sales counselor to see where you're at on the list, because in DFW, we are dealing with a lot of supply and demand issues, both with land and then with the construction materials as we're going through the process. But as soon as you can get that contract locked in with pricing and incentives, I highly recommend you do, because again, with those material costs changing, if you're locked in, you're not going to have to be subject to those increases.
Absolutely.
Awesome. Well, have a great day. Thanks for joining us, and we'll talk soon.
All right. See you guys.